morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, April the 8th. Another triple-digit loss for the Dow Jones, down 166 points. Nasdaq down 47. S&P down 20, and the Russell down 17. So about 1.5% losses across the board on all the major indices. Not good. Not pretty at all. And we just continue to get eager sellers looking to sell at these levels. We were up about 3.5 handles in the pre-market early this morning, and now we gave it all back again, and we're down only about 50 cents in the ES contract, but still not good that we're not looking for any type of bounce. Now, we've had two real big days of selling, and we wiped out any of the gains for the year in 2 days. So you have to really take a step back and say, wow, that's not good that we have now a lot of sellers come in. We have a lot of warning signs. We have a lot of retail buying on margin, which will be getting margin calls, will fuel the selling. So it's not looking too good out there. Now, we don't think that obviously the market just goes straight down. But in the last 2 days, it certainly felt that way. Massive liquidations on all the high beta names, all the momentum players such as the Baidus, the LinkedIns, the Apple just really getting decimated. All of those high beta name stocks are just taken to the woodshed. And I don't mean the last couple days. I mean that's been happening for a while, and that's where we come into this video and I try to get everybody on the right side, or just say, hey, heads up, be careful. Leaders are starting to falter here. Money's rotating out of high speculative names, Russell 2000, the small cap names, good gauge of risk, and going into these conservative sectors such as, consumer staples. Even healthcare got crushed, but usually money flows into that healthcare. But you notice that a lot of money's going into energy. And I mentioned on the weekend video that the markets are vulnerable, that when energy stocks start to really rise on a certain market, you start seeing a market top here. And I wanted to show that to you in this segment. So just keep an eye on things. Markets happen really fast, guys. And, when in doubt, cash is a position. Please remember that. That's my favorite saying. And I like to take a step back. And just look at what's happening around us. Now, obviously, if you're holding positions, that's also fine. And I know it's a little disturbing sometimes. We're all human. But you need to just kind of take a step back, reevaluate your position, say, hey, the position's still intact. The theme still remains the same on why I'm holding these long. That's fine. Maybe you might want to buy some protection. But remember, protection is getting expensive now. Not that expensive. VIX really hasn't gone too much, but you get another big push to the downside, and sure enough, the VIX premiums are going to start to rise on those when you want to buy some put protection. So it's always eager to do it when you don't have that fear in place, and where fear is starting to creep up, no question about it. All right, so let's go right into the charts here. I want to look at the dollar index, and I wanted to show you that we do have a big move up. We had that pop up on Friday. And sure enough, we held that 200. We capped it. And then we had Monday. And, of course, this morning now, being Tuesday morning, the dollar is actually continuing to head lower. Now, I don't know if this is a bottom. I'm not certain. But as of right now, it is starting to move lower. So if you are trading the currencies, look at the yen pairs. The dollar pairs, as well as the yen pairs. When you have a weak dollar, you'll have a higher yen. So the yen pairs and the dollar pairs will bode well for a trade or two if you want to look at that. But again, if the dollar is starting to falter here, keep an eye on some of the commodity-related ETFs. There'll definitely be a trade. And actually, right now, will help oil as well, and oil is up in the pre-market about 68 cents, the crude oil. All right, so let's see where this stops. Next thing, once it pivots and starts to revert back up, then we can kind of set up the long side targets for the dollar. And if that does pivot, makes a higher low, that low may be in place. As of right now, we really can't call that a major low is intact here from this area. Maybe we get a double bottom. So we just want to watch and see what happens with that. Okay, the ES. Now, I mentioned we're down 50 cents. Now we're down actually $1.25. So we gave up all of the pre-market gains, and now we're really sitting close. These two trend lines are from the November 2012 election year lows. Now, this is very valid. I think this holds today. I do think that we get a flush and then probably a bounce. A dead cat bounce back up to the 20 is where I'm going to look to get short the market. And it's going to be about 1857, 1860. Remember, we don't just short it because price is up there. We're going to need a trigger. But at least that's going to be the area where I'm going to be looking to get short the market. I'm not going to get short down here. We had massive 2 days low, and if we do spike low one more time this morning, that might be a good buying opportunity. So just keep that in mind. Remember, follow your trading plan. Here's the hourly chart. Now you can see here, we just literally gave it all up in the pre-market session here. We bounced up from 1843. Now we're down 1836. So we're down, substantially from when we had the move up in the pre-market. Okay, down $1.25. Now take a look at the spiders. Now, we're on the 50-day moving average, okay, and that should trigger some sort of a bounce play. Now, I don't think, even if it bounces, I don't think that this market challenges the highs anytime soon. I think that we do get maybe bear flag patterns down, bear flag patterns down, some sort of a zigzag here like this, and then start to move lower again, maybe catch this lower trend line. Remember, in the bigger scheme of things, this market is still bullish in the weekly and monthly charts, okay? So we want to set up the long side once we get that signal that we're done going down. But as of right now, you don't want to be catching a falling knife, and you don't want to get short right here. So you want to. I like to see a big flush right at the opening, and I'll start looking to buy some stocks with a tight stop. That's what I'm looking for this morning. If we get that flush. Now, if we don't, and the market gets stabilized in the pre-market, and then we can start moving up, then I'll look for some quality names that have been beaten up, like energy. Just following what the market was doing. Let me just see here. Oh, I guess this one didn't. Okay. Let me get to the 30-minute chart. Here's the Bollinger Bands with the 30-minute SPY. Love to look at this. As you can see here, when the Bollinger Bands tighten, usually we get some sort of a move. And sure enough, as you can see here on the 4th, we did get that move, and we did break down lower. Now the Bollinger Bands needs a lot of work to tighten. So let's see what happens here. It's going to need at least several days before the Bollinger Bands catch up and starts to tighten again. Now the transports, I like the transports. I still like the transports. I like the truckers, the UPS. I like FedEx, beating down KSU. So I'm watching the transports for some stabilization before I get back into the truckers, UPS, and FedEx to be another one. But let's watch it here. It's again above the 50-day moving average. Okay, we did break the 20. Let's see if we can muster up a little bit of movement to the upside. And I would, for at least a trade, look at UPS. UPS looks one of the better ones out there. Now, the Russell, what can you say? It's just, massive liquidation, risk off, no question about it. So you need to be cautious here, okay? Well, why? Well, because one of our leaders is starting to break down, as well as the transports, but at least it's above its 50-day moving average, where we're far below it. Next target is going to be the 200-day moving average, guys, unfortunately, and not looking pretty at all. So this is not looking good. Another warning sign for the bulls. Same thing with the Qs. Now, obviously, it is heavily weighted in big cap technology and, of course, biotech, large biotech stocks. So it has really taken it on the chin, as well as Apple, heavily weighted in Apple. So the next target would be this pivotal low here from the February 5th low of 83.67, and then you're going to test that 200-day. Okay, so that doesn't look good as well. And then we have the diamonds here, again, well above, holding up better than the other indices. It's still above its 50-day moving average, but again, that's going to be your next area here. Okay, so the indices are definitely breaking down. Now, USO. I like the spot here, and right now crude oil is up 67 cents, so this should be moving up to this upper end of the range. You see how the Bollinger Bands are starting to come in here, starting to pinch, and you see the moving average. Look at the MACDs here; they're starting to converge the moving averages. So I do like crude oil here. I like the spot a lot because if we take out this low, it's really easy to manage. You can start buying in this pattern here, in this little channel, 35.60 to 36.70. So give it a buck in between, and your low would be this low here to be your stop. Anywhere below there, according to your trading plan. So I do like it for at least a test of the highs here. Eventually, getting closer to the spring driving season. USO and oil will start to falter and start to break down again. But again, I do like it for a trade, some of the oil stocks. XLE, as you can see, now this took it on the chin here, so watch it. It's above its 20. But XLE for a trade, if you want to just go right to the ETF sometime today or tomorrow, once it stabilizes, I think this is going to be a good trade. And you can see we're at the upper end of this trend line here, this little horizontal channel, as you can see. So this is actually a pretty decent trade setting up here. So I do like the XLE and the components in it. Same thing with the OYH. And remember, all of this sold off because of what the markets are doing. So I do like the OYH as well. Apache being one of them here. So and look at how well this held up in 2 days. So this is one of my stocks I'll be looking today for a possible trade. And then of course Schlumberger. Schlumberger, SLB, and look at this, it's still above its 8. So any weakness in SLB back to the 20, or actually back to the 93.65, I would look to buy with 2 hands. Love the drillers. Home construction, I would stay away from right now. It's getting sold off, just like the rest of the market. And then XHB, what can you say? Back to the 200-day moving average. So remember, although these sectors like the solars, the banks, and the home builders, those are a lot of my favorite go-to sectors, but not when the markets are selling off, when you have mass liquidation, because those are the first to sell off. This is going to give you a great opportunity to move into these sectors once the market stabilizes. Okay, so just keep an eye on them, but look for strong stocks, look for strong sectors that you want to look to buy when the market stabilizes. And even if it's a day trade, you'll get more momentum out of it to the upside, and you'll make more money than buying something that's been beaten up. Okay? All right, guys, have a great day today. Keep your stops in place. Be careful out there. Remember, when in doubt, cash is a position, and we'll speak to you tomorrow. Take care.